Hello and good morning. I'm Edgar Kadeshabe. This is Traders Next Door, and you're about to hear the Daily Scoop. And today is NFP, baby. Everyone's most important and favorite news event to trade. This is a really important NFP because it's the first NFP that we have had since the Fed cut rates. And it's going to be a really important factor heading into the next round of rate cuts that we're expecting at the next FOMC meeting. But before we get into what is the nitty-gritty of NFP and what the data is going to come out, let's talk about what NFP actually is and why we should care. Now, NFP is a measure of the number of jobs that have been added or subtracted from the US economy in the last month. This is excluding farm jobs because farm jobs tend to be very seasonal and very volatile. So to keep a smooth curve on the stats, those are excluded from the measure. Now, it's an indication of how strong the US economy is, what the overall health is. The more jobs that are being added to the economy, the more people are employed, the better the US economy's GDP. Now, the Fed is going to be keeping a very tight eye on this figure because, as we know, inflation has been running really hot, hotter than your laptop after machine gunning a few trades for a day. And the Fed is looking to cool that inflation a little bit because it has been running hot for quite a while now and it has started to affect the economy. Hence why the Fed started with the rate cuts. But here's the catch. You can't drop the rates too soon, too quickly. It is a delicate balancing act versus how high they're going to be for how long and how soon you can cut them down. So NFP is going to give us an important indication of if the balance so far with the 50 basis point cut that we got earlier is about right. Now, rate cuts don't have an immediate effect on the US economy. It has a trickle-down effect. It's going to take some time for us to see the effects of it. But given the last month of economic activity, this is going to be really important data that the Fed is going to be looking out for. So if today's NFP shows strong job growth, and we beat the target of 148,000 jobs, match or beat, this will be an increase from the previous 142,000. That is going to give the Fed reason to maybe cool down with the rate cuts for now, keep things status quo, or at least be very conservative on their rate cuts moving forward. Alternatively, if we get a huge miss here, this could signal that the Fed might actually be behind the curve and maybe they need to be a little bit more aggressive on the expected rate cuts moving forward for the next 6 meetings. So interest rates are like a little house guest. You eventually want them to go home, but you can't chase them out too soon without looking rude. So we're gonna have to find out where the Fed is and what balancing game they're going to play. Subsequently, all of this is going to have a massive impact on the US dollar itself. A strong NFP is going to push the dollar up and is going to end the bearish run that the dollar has had lately. Already, we're seeing signs that this bearish run might be coming to an end because we've had some really positive data come out in the last little while. ADP, which is a precursor of NFP, came out very positive, beating its predicted target of 124,000 with 143,000 jobs in the private sector added. Services PMI came out extremely positive, and unemployment claims, although it came out with a miss, it was a very small miss. So a lot of bullish signs for the dollar have been coming out, and if NFP continues this trend, then we're going to see the US dollar take a massive spike to the upside, and indices and commodities like NASDAQ, US 30, and gold are going to take a dive. So this is not going to be, however, a super simple event to trade because, as we discussed in previous episodes, NFP does not come out as a once-off singular point of data. You have unemployment claims that come out at the same time and average hourly earnings. So because we have 3 events coming out at the same time and not just the one, a hit or miss in division of these 3 could result in some mixed data, which is going to cause a lot of volatility on the market. However, with a flat change expected on your unemployment rate and only a small drop expected on average hourly earnings, this all points toward signs that we might be in for some positive movement on the US dollar. What the data actually comes out as is anybody's guess, so be very responsible when trying to trade it. However, it does appear that the US dollar is at its point in time to rally. If it misses, however, then it's likely to expect that NAS, US 30, and gold are likely to hit all-time highs again in the very near future. So it's a very exciting time for us as traders. It's going to be a very exciting time for the coming weeks, months, and into the end of the year. So this is your time to take the opportunity. You can join Project G today, join live, and you'll be able to trade NFP with two experts on the subject who are going to be able to help you capitalize the best way they can. You can find a link in the description down below on how to join Project G. Make sure you join before 1 o'clock today, else you're going to miss the cutoff. I've been Ed Katishabe. This has been Traders Next Door. You've heard the Daily Scoop, and we'll see you next week.